Good morning and welcome to the new federal ratio small business lending law taking effect soon. Today we'll be discussing the 1071 regulation coming into effect. I'd like to introduce our guest speaker first. Elena Babinecz is a managing counsel in the Office of Regulations at the Consumer Financial Protection Bureau. In this capacity, she manages and oversees the office fair lending and language access work, including the 1071 small business lending data collection rulemaking. For several years, Mrs. Babinecz was also co-chair of the Consumer Financial Protection Bureau's Diversity and Inclusion Council of Employees. Mrs. Babinecz is a graduate of Duke University School of Law and received her undergraduate degree from Cornell University. She was born in Buenos Aires, Argentina, and now resides in Washington, D.C. It is my pleasure to welcome our guest speaker this morning, Mrs. Elean Babinecz.
Thank you very much. It's great to be here. So I've been directly involved in this project and the small business lending project for quite many years. So it's great to be here today to be providing an overview of the proposed rule that we just released recently. So on your screen, hopefully you can see a deck, and it's my understanding that this deck will be provided to you so you can reference it later. There's a lot to go through, so I'm going to try not to speed talk, but I also want to make sure I cover all the significant portions of the proposed rule. So let's go ahead and get started. First, just a disclaimer that I need to provide. I'm making this presentation on behalf of the Bureau, but it does not constitute legal interpretation or guidance or advice by the Bureau. Any opinions or views that are stated are my own, and they don't represent the Bureau's view. Okay, so moving on. So what is Section 1071? In Section 1071 of the Dodd Frank Act, Congress directed the Bureau to adopt regulations governing the collection of small business lending data. Specifically, Section 1071 amended the Equal Credit Opportunity Act to require, subject to rules issued by the Bureau, that financial institutions collect and report to the Bureau certain data on applications for credit for women-owned, minority-owned, and small businesses. For those of you that might be familiar with the Home Mortgage Disclosure Act, also known as HMDA, as an overall general matter, 1071 is very similar to HMDA. It's a data collection and reporting regime. So what's really important here to point out is that there are two statutory purposes enumerated in Section 1071. Congress enacted 1071 for the purpose of, first, facilitating enforcement of fair lending laws, and second, enabling communities, governmental entities, and creditors to identify business and community development needs and opportunities for women-owned, minority-owned, and small businesses. It's important to remember that these statutory purposes guide our work in this rulemaking. So why is 1071 important? Well, if finalized, the Bureau's proposed rule would create the first comprehensive database of small business credit applications in the United States. This would include critical information about women-owned and minority-owned small businesses to help regulators and the public identify and address fair lending concerns. The database would also enable a range of stakeholders to better identify business and community needs and opportunities for small businesses, including women-owned and minority-owned small businesses. Just as the Bureau works in other ways to help foster fairness and opportunity in consumer financial services markets for all consumers, the proposed 1071 rule is structured to realize these same goals for the small business market. Research indicates that minority-owned small businesses face particular obstacles, as do those that are women-owned, but the current lack of comprehensive quantitative data has made it difficult to understand the extent of these obstacles and respond with responsive policy. By shining a light on lending practices in this area, the Bureau believes that the 1071 data would not only foster a culture of compliance, but also bring particular attention to the underserved parts of the small business market that have traditionally faced the greatest obstacles to access and to success. In this way, the proposed rule is intended to help small businesses drive inclusive and equitable growth. So now on to the next slide. So I'm on slide 4. The Bureau's been working on, as I mentioned, the Bureau's been working on this rulemaking for a number of years. And you'll see here on the screen, we've done many things, including back in 2017, we issued a request for information. We released a white paper to give an understanding of the landscape of the small business lending market. We held a hearing in Los Angeles. We did several things. I won't go through it all. It's there on your slide. But one item of particular note here is that last year, the Bureau completed the SBREFA process. The SBREFA process is a pre-proposal step that the Bureau must pursue in rules that are likely to have a significant economic impact on a substantial number of small entities. So under this process, what the Bureau did is we were required to consult with representatives of small entities, small financial institutions that would likely be directly affected by the rule that the Bureau is considering. We met with about 20 small entity representatives, and they represented a diverse group of community banks, credit unions, CDFIs, fintechs, and commercial finance companies. So with this diverse group of smaller entities, we explored the potential impacts the proposals that we were considering might have on small entities. And we also thought about potential alternatives. We also invited other stakeholders to submit written feedback on the outline of proposals, again, as part of the SBREFA process last year. The feedback we received from both the small entity representatives as well as other stakeholders was very helpful to us in preparing the proposed rule that I will now go over. So again, this is an important example of how feedback that we receive informs what we put forward. So the Bureau released an outline as part of the SBREFA process. We convened a panel of those representatives, and then subsequently in December of last year, we released the panel report and made it public so that everyone could see what the Bureau was considering proposing. And then 9 months later, in September of this year, we released our proposed rule. As I'll discuss a little later in this presentation, the deadline to comment on the proposed rule ends on January 6th. So now on slide, actually, let's go back 1 second here. I just want to give a little context for what I'll be talking about next. So, more specifics about our proposed rule. The proposed rule addresses a number of aspects related to the scope of the rule, mainly which financial institutions must collect data, when they must collect it, from which businesses, and about what forms of credit. I'll walk through all of these and then get into the specifics of what data must be collected and how it must be maintained by financial institutions and reported to the Bureau. Here I want to emphasize that everything I'm talking about and going to talk about is what the Bureau has proposed. None of what I am discussing today has been finalized. Again, the comment period is open and we will fully consider timely comments before we issue a final rule. So moving on to the key aspects of the scope of this proposed rule. So here we think about, which financial institutions must collect data under the Bureau's proposal. That is, who would be a covered lender under the rule. The Bureau is proposing to define a financial institution consistent with language in Section 1071 itself, which is actually quite broad. Under this proposed definition, the data collection and reporting obligations of the rule would apply broadly to lenders to small businesses. This definition of financial institution would include depository institutions like banks and credit unions, online lenders and platform lenders, community development financial institutions, CDFIs, both those that are depository institutions as well as non-depository institutions, lenders involved in equipment and vehicle financing, commercial finance companies, governmental lending entities and nonprofits, as well as other non-depository lenders. One important thing to point out here is that this proposal does not include motor vehicle dealers pursuant to a carve-out in the Dodd Frank Act. I want to point out here, however, that while the proposed definition of financial institution is quite broad and thus covers many lenders, the Bureau has proposed what we're calling an activity-based exemption. Because the rule might otherwise apply very broadly, the Bureau is concerned that financial institutions with the lowest volume of small business lending might reduce or cease their small business lending activity because of the fixed costs of coming into compliance with an eventual 1071 rule. And, I think it goes without saying, but I'll say it, that a reduction in access to credit as a result of compliance costs with the rule would run contrary to the community development purpose of Section 1071. For that reason, the Bureau thus proposed, in light of the 1071 statutory purposes, that a financial institution would be covered and thus required to collect and report 1071 data if it originates 25 or more covered loans to small businesses in each of the 2 preceding calendar years. Thus, if a lender does not meet this threshold, it would not be required to collect and report small business lending data. The Bureau believes that many small banks and credit unions, as well as other types of lenders, would be exempted from this rule by virtue of this origination threshold, given the small volume of loans originated year to year. However, the Bureau believes that small banks and credit unions that frequently provide small business loans should be covered by the rule, since they provide important services to their communities, and lending activity conducted by these institutions would constitute meaningful, important data to capture for both of 1071 statutory purposes. So now let's move on from, what lenders are covered to what forms of credit financial institutions must collect data on. That is, what products are covered by the proposed rule. Section 1071 requires financial institutions to collect and report information regarding any application for credit. The Bureau's proposal follows Regulation B's existing definition of business credit with certain adjustments. So what's important to note here is that the proposal stated that covered credit would include loans, lines of credit, credit cards, and merchant cash advances. The proposal also makes clear that agricultural credit and HMDA reportable loans are also included. It's important to note here that covering MCAs, merchant cash advances, is a shift from our approach that we had at Sabrifa. We're proposing to include MCAs based on the input from stakeholders, many of whom detailed fair lending concerns related to MCAs, such as higher prices, and based on evidence showing that minority-owned small businesses disproportionately use MCAs. Also here, important to note that the Bureau proposed that certain products be excluded from the definition of covered credit transaction, or otherwise, made clear that they would not be covered by the 1071 rule. These covered products would be things like, and these are the ones that are not covered in the proposal, trade credit, factoring, leasing, consumer credit that's used for business purposes, and credit secured by certain investment properties. So now let's move on to, we've covered what types of credit would be captured in the proposal. Let's now go to when, at what point in time do financial institutions need to collect and report 1071 data? Under the proposal, financial institutions would not have to collect 1071 data until they receive a covered application. So that's key, a covered application, which the Bureau is proposing to define largely consistent with the Regulation B definition of application. The rule proposes, however, not to cover the following. For example, we propose not to cover pre-application inquiries and pre-qualification requests. We also propose not to cover reevaluation, extension, and renewal requests of an existing business credit, unless, of course, the request seeks additional credit amounts, then it would be covered. It really wanted to highlight here, however, that in light of fair lending concerns, specifically with respect to potential discouragement of minority and women-owned small businesses, the Bureau did propose to include collection and reporting of incomplete and withdrawn applications. That's an important piece to highlight here. Next, let's go to, for some reason, let me get back on track here. I don't know what happened with the slides. Okay, so we just went through the type of credit and application. So now let's turn to, for some reason, Quintana, it's jumping around for me. Give me 1 second, everyone. Okay, so slide 9. Now on to, again, another very important scoping piece of the proposal. From which businesses do financial institutions need to collect and report 1071 data on? That is, how did the Bureau propose to define a small business from which information must be gathered? So covered financial institutions would only have data collection and reporting obligations with respect to small business credit. The Bureau is proposing to define small business for these purposes by cross-referencing the SBA's, the Small Business Administration's, general definition of small business concern, but to adopt a simplified size standard alternative for the 1071 rule that is based on gross annual revenue. Again, the Bureau here received feedback through the SBREFA process, as well as many years prior to that, expressing a desire from stakeholders that the Bureau propose and finalize a simpler alternative to the small business definition. As such, the Bureau is proposing that for purposes of the 1071 rule, a business is a small business if its gross annual revenue for its preceding fiscal year is $5 million or less. One thing I wanted to point out here that's important is that 1071 refers again to the definition of small business concern in the SBA Act. However, in order to define small business using anything other than the SBA's standards, we have to meet certain specific statutory criteria, including approval from the Small Business Administration's administrator. So as such, the Bureau is seeking SBA approval for this alternative size standard. One other quick thing I will note is that we sometimes get questions about what about the treatment of non-small women-owned and minority-owned businesses. The Bureau is proposing to cover all applications for credit from small businesses. It's important to note that most existing businesses are small business concerns, as that term is used in the Small Business Act. And because of that overlap, the rule that we proposed would cover nearly all women-owned and minority-owned businesses. The Bureau is therefore proposing that the data collection and reporting requirements of the rule would apply to any application to a financial institution for credit by a small business. FIs or financial institutions would not be required to collect and report 1071 data for women-owned and minority-owned businesses that are not small. But again, the proposal covers most minority and women-owned businesses. So now moving on to the data. What data would financial institutions have to collect and report? So first here, a few general notes just to highlight. Once the obligation to collect data arises, financial institutions would have discretion about exactly when and how to collect 1071 data. However, FIs or financial institutions must maintain procedures to collect applicant-provided data at a time and in a manner that is reasonably designed to obtain a response from the applicant. Again, we want this data. So while we want to provide flexibility, for example, for alternate lending models, it's also, essential that the data actually be collected. So there's flexibility, but there's some guardrails around maintaining procedures so that data is actually collected from applicants. Next slide here on data points. Just again, general wanted to note that financial institutions would be permitted to rely on what the applicant tells them regarding 1071 data. There is no obligation to verify this information. However, the proposal does state that if the financial institution does in fact verify any of the information it collects from the applicant, it generally must report the verified information. Also, the Bureau is proposing to allow institutions to reuse certain previously collected data if it falls into certain circumstances. It's not worth our time today to go into those specifics, but there is some flexibility there to allow institutions to reuse certain data that they've previously collected from an applicant. Next slide, 12. So here, consistent with the statute, financial institutions would be required to collect and report a number of data points from small businesses that submit covered applications. The statute lists a number of data points that institutions must collect and report, and the statute also permits the Bureau to require institutions to collect and report other data that the Bureau determines would aid in fulfilling Section 1071's statutory purposes. So now I'll walk through our proposed data points briefly, and I've grouped them into a couple of different categories to help us get through this. So first, we have data points that are or could be provided by the applicant. This includes data related to the credit that's being applied for. So that's, for example, the credit type, the purpose, and the amount of credit that's applied for. There's also data related to the applicant's business. That includes a census tract for the applicant's business and the applicant's gross annual revenue, as well as the applicant's 6-digit North American Industry Classification System, also known as NAICS code, as well as the number of workers, time in business, and the number of principal owners. Next slide, 13. Also in this first category are some data points addressing the demographics of the applicant's ownership. So that's whether, for example, the applicant is a minority-owned or women-owned business, and the ethnicity, race, and sex of the applicant's principal owners. A few important notes here. Similar to HMDA, the Home Mortgage Disclosure Act that I referenced earlier, we've proposed that race and ethnicity information be collected using both aggregate as well as disaggregated subcategories. So what exactly does that mean? For example, if a small business applicant identifies as Latina, that applicant may select Hispanic or Latino as their ethnicity, and they may also select or provide a specific subcategory of ethnicity, for example, Mexican, Cuban, Puerto Rican, and so on. With respect to the collection of sex information about a small business applicant, I wanted to point out that in light of last year's Supreme Court's Bostock decision, as well as the Bureau's recent ACOA, Equal Credit Opportunity Act interpretive rule regarding sex discrimination, stating that sex discrimination includes sexual orientation and gender identity discrimination. What we've proposed in this rule is to permit principal owners to self-describe their sex, which they can do instead of or in addition to selecting male or female. The last point I wanted to make in terms of demographic data collection is that if no ethnicity, race, or sex information is provided for any of the principal owners, and the financial institution meets any principal owner face-to-face or in a video context where they can see the applicant, then the financial institution would be required to collect at least one principal owner's race and ethnicity via visual observation or surname and report that data. Again, going to the importance of this demographic data in light of the 1071 statutory purposes. One last thing I'll note here is that to assist financial institutions in collecting this incredibly important information, and also as a way to encourage small business applicants to provide their demographic information, the Bureau proposed a sample form as part of its proposed rule that financial institutions could use to collect this information. And we also provide some disclosures. I see that I'm getting close to the time here. Thank you so much. Okay, so let's jump ahead a little bit. I won't go through this slide 14 lists some additional data points that the Bureau has proposed to collect, many of which is, some of which is statutory required and other that the Bureau thought would further the purposes. Denial reasons is one that we thought was incredibly important so that we understand why certain applicants were denied credit. And here as well, wanted to point out the significance and importance of our proposal that we propose to include the collection reporting of pricing information. This really, when you think about a comprehensive database about small business lending, this is really moving the needle in the view of the Bureau with respect to understanding the market and understanding the terms of credit that small business applicants are receiving. The firewall, I don't think that's that necessary to go over. Here, data would be reported on a calendar year basis, very similar to HMDA. So an institution, if they're covered by the rule, they would collect data for a year, and then the following year, the June of the following year, they would report that data to the Bureau. That's what we proposed. Lastly, so this is one, let me just go through this last slide here, and then I'll turn it over back to the moderator. So here on slide 18, this deals with the publication of 1071 data, and I think this is particularly important to highlight. So regarding the publication, the Bureau is proposing to make available to the public on an annual basis via the Bureau's website the reporting of application level data for each financial institution. However, the statute permits the Bureau to modify or delete data prior to publication if the Bureau determines that doing so would advance a privacy interest. So this is a very important piece of the proposed rule that I think the audience will want to hear about. To determine what modifications or deletions to make, the Bureau is proposing what we call a balancing test. The balancing test generally would assess the risks to privacy interests of applicants, individuals, or financial institutions against the benefits to public disclosure in light of the statute's purposes. So with respect to privacy risks, the balancing test would consider the risks of potential re-identification of the applicant against, as well as the risks of harm and sensitivity if certain data were made public. So again, the proposal doesn't make any specific deletion or modification determinations. Instead, it sets forth a balancing test that the Bureau will use down the road once we get a year of the data in, and we have that data to properly do an accurate empirical analysis of potential re-identification risk. We would then issue a policy statement stating what data would be made available to the public. Last thing real quick is just this last page is important here. This website, cfpb.gov/1071-rule, that is where you can go to find, for example, the proposed rule. We also provided, which we thought would be helpful to the public to really understand the rule and turn to certain parts of the rule that are of most importance to you. We provided a table of content so you can go to the sections that are most relevant for you. We also provided a list of the data points so that you can understand exactly what's proposed, as well as a summary of the rule, a several pages of summary as opposed to the 900 plus rule itself that gives you a good understanding of what we propose. Again, just want to conclude the presentation by emphasizing the importance of providing comment to this proposed rule. Not only if, I would say, please provide comment both with respect to what you agree with. If there's a part of the rule that you support, please let us know, as well as if there are things that you think we could do differently in the proposed rule as we work toward the final rule. Please let us know what we should be doing differently. And with that, I will stop talking. Thank you very much.
All right. Thank you, Elena. I think we will have a few remarks about access to capital from Dr. Guerra. Are you there, Dr. Guerra?
Yes, I am. Excuse my lateness a little bit. No disrespect, Elena. I caught you kind of at the beginning, so I did hear most of it. And I'm in Mexico City right now in my hotel, and I went up the wrong elevator. I had to run all the way across the hotel to try to get on time. But thank you for being with us this morning. I'm just really learning a lot more about the 1071, and I'll have a question at the end of what I wanted to say. And I'm the chairman of the Latin Business Association. I'm also heading up the California Black and Latino CRA Coalition. So thank you for having me also, Al, and the group. We have known for many years that the financial institutions have not been fair in lending, and that minority businesses have been singled out when it comes to lending. All records show higher lending to non-minority businesses. There must be better lending methods like 1071 to ensure that every business, no matter what race, are being treated equally. This is especially crucial during these pandemic times, after pandemic times, that a lot of businesses are in need of business loans and access to capital. So it is crucial right now. We are hearing from a lot of businesses. There's a lot of businesses that had to shut down. We, as a member organization, lost about 20% of our members to closing their businesses because of access to capital. Many of them that had told us that they were not able to get a business loan to keep their businesses going. Yet they had good credit, personal good credit, that they were willing to put up on their business. And they had great revenues before the pandemic, but the banks weren't looking at that. They wanted to see what was now. And it's impossible with a business that had lost so much revenue during the past 2 years that they were forced to shut down. And that's still happening right now with some of a lot of the businesses that are looking for business loans. A lot of them are looking towards the SBA and a lot of the money that's being given out. Of course, a lot of that has been kind of tied up in politics. So a lot of the money isn't moving like it's supposed to. So we are looking at banks to step up and really help our community. So thank you, Elena, and we look forward to working more with you. And the question that I have, I wanted to put that at the end, was in the real world, I understand everything you talked about, but I think there's a lot of probably people on watching that don't understand a lot of the verbiage of 1071. In the real world, I hope that today we can hear a little bit about how long is this really going to take, and what are the next steps to getting it accomplished. And thank you. I hope I was on 2 minutes, Al.
No, thank you. You're perfectly fine. And Dr. Guerra talks about, the challenge of access to capital. On the other side, what the evolution of 1071 does, especially for academics, those who do research in this area, as well as activists, those in the community who are looking to put pressure on the banks or at least keep financial institutions accountable for their actions and participations in the communities in which they serve. What we're looking for in terms of 1071 is understanding that we know financial institutions provide loans. The challenge we have when data and information is aggregated, we are unable to discern who those loans are made to and where they're made to. We can understand the concept that in order to hold financial institutions accountable, we need to be able to segregate data to understand specifically who is getting access to capital, where that capital is being deployed. That's what the evolution of 1071 will allow researchers, activists, community people to be able to follow information, to be able to highlight challenges of access to capital, and be able to pinpoint to institutions what they're doing and specifically what they're not doing. So I appreciate your comments, and I appreciate the work that's being put into getting us this far. I think at this time, I'd like to ask our other participants if they would like to make comments before we move to Al Pina demonstrating the access to the comment period from a website. Deborah?
Yes, thank you very much for the opportunity to make a comment. I think this rule is important because we need the data to reflect the true picture that Black and Latino owned businesses. Can you hear me?
Yes.
Believe we are.
Okay. So we need the data to reflect the true picture that Black and Latino owned businesses are not treated equal when it comes to fair lending practices and contracting opportunities. And so we hope that this proposed 1071 rule will set the real parameters for banking and government entities to follow. Black business owners, and I can speak as a Black business owner, that we've been deceived by the current data and collection and reporting practices that tend to group Black-owned businesses with other so-called minority groups for the sake of banking institutions appearing to be compliant with regulations that are supposed to create a level playing field in contracting and access to capital. So this rule is really important. I'm glad to hear that it's being data is being collected, to include racial breakdown. But it's also, really important that we specify the minority groups so that we're just not lost, and that it sends a stronger message by giving further breakdown in the language. But I'll stop there.
Great, thank you, Deborah, and thank you, Elena, for a wonderful presentation. My name is Adam Briones. I'm CEO of California Community Builders. My organization focuses on building power for people of color by closing the racial wealth gap. Obviously, small business is one of the primary ways in which Americans build wealth for themselves and their families. From our perspective, one of the most important things with this new regulation and new data that will be available is that it be readily understandable and accessible to the average American and the average researcher. I think one of the best things that this data can do from our perspective is bring transparency and a great tool to the average person looking at these issues, and without needing to work with expensive software and without needing to have a PhD, being able to understand very clearly what the data says and how to access it. And then also, especially being an organization based in California, we are especially concerned and hopeful that the new data will disaggregate amongst the Asian American community. Here in California, we have one of the largest Asian American communities in the country. And unfortunately, that community is often grouped together under a large umbrella that does a very big disservice to the diversity in terms of income, language, and economic status within that community. For instance, one of the most low-income communities in California is the Southeast Asian community, and specifically the Hmong community. Further, not many people know the Korean American community was one of the hardest hit communities in the foreclosure crisis of 2008, with rates comparable to the African American and Latino community. But because so much of the data that we see in news reports and other academic research is often presented without disaggregation, those communities are often left behind and left out because there's not good data to support them. So again, my organization, Speaking as Californians, is very excited to see the new data that will be coming out. And we truly believe that no one should be scared of sunshine. And what this new data will represent is truly just that, sunshine. And we've seen the great results that HMDA has produced, and we look forward to seeing the great results new data will produce. Thank you.
Thank you, Adam. Professor Gaudier got put out. So while he goes back, tries to get back in, Elena, there's a question from the audience saying, when will this rule be implemented, and how, when can we use it for advancement? I mean, how can we use it or access that data?
Yes. So a great question. I know the public has been waiting for this data for many years. I want to emphasize that this is a priority for the Bureau. We have a large team working on this rulemaking, and again, has been emphasized as a priority for the director, by the director. In terms of timing, right now, there has been no decision made on when the final rule will be released. So let me just, in light of that, let me just give a little bit more flavor in terms of what's next to give you a sense of what the team's working on. So as I mentioned, the public comment period ends on January 6th. So the comments made here by my fellow panelists, I hope to see comment letters submitted so that the Bureau can carefully consider all of the comments that we receive in response to this proposed rule. We have no idea of knowing how many comments we will get in response to this proposed rule. We're hoping to get a diversity of viewpoints to really inform where we land on the final rule. In light of that, it's very hard to come up with a calendar when you don't know what you're dealing with. However, just in terms of the steps of the rulemaking process, the first step would be reviewing those comments. The team would then make legal and policy recommendations to the front office for consideration and decision by the CFPB's director. Once we get those decisions, the team would then put pen to paper and start drafting the final rule. Here, I really want to emphasize, there's a tension here, right? I, like all of you, want this rule completed as quickly as possible, and we want the data available as quickly as possible for all the reasons my fellow panelists discussed and that I discussed. However, one thing that is at tension with that is doing this right? From my perspective as the manager on this project, I want to ensure that the team has adequate time to do it well, that we avoid, errors that then down the road lead to challenges to the rule. We really want to ensure successful implementation of the new requirements that will be imposed on financial institutions. And doing that well and doing it thoughtfully and carefully will result, in our opinion, in the Bureau's opinion, in getting the data soon, right? As soon as possible. But we don't want to go too quickly and then risk errors and missing important pieces in getting it right. So again, the most I can say in terms of when it will be available, we are working very, very hard. We worked incredibly hard from SBREFA to the proposed rule. Those 8 or 9 months was quite a challenge for the team. We're dedicated. We see the value of this rule so much, but we also need to get it right. So, decision on final rule will come, I believe, once we have a better sense of the number of comments we've received. But again, I want to emphasize the importance of this.
Thank you, Elena. If I could add real quick, we had a question regarding the challenge. There's a challenge for Black and Brown communities that because we lack businesses. You know, it's absolutely right. We lack businesses in our community because there is a lack of access to capital, bar none. And what we'd like the audience to understand, we know, as you know, and Elena aside, because she's a neutral party, but as far as the advocates on this webinar, this new law is really going to be one of the most historic and most moving laws we've seen in our lifetime. Why? What some people say, well, Al, there's no enforcement. There doesn't need to be enforcement. Remember, the most valued asset a major company has, including banks, a Bank of America, a Chase, a Wells Fargo, it is their brand. The goodwill in their brand is the most valuable asset that any big company has. And if there, you see when there is a problem and a car crashes and it's the fault of the manufacturer, they try to fix it because it's going to impact the value of that brand goodwill. So when let's say Wells Fargo in Los Angeles, who and Latinos represent 60% of the population, yet they're only lending 15% of their loans, 10% of their loans are going to Latinos, there's an issue. There's going to be a perception issue, a narrative issue that they're going to have that will impact their brand. And it's going to be up to us on this call to get the data out. And what we're going to do, one of the things that we're going to do, I'll share with you, we have erected a website. If you can see this is a website called www.1071data.org. We're going to work with 50 cities. These 50 cities, we're going to work with community leaders throughout these 50 cities to promote and present to the community all the data that we can extrapolate from the Consumer Financial Protection Bureau website that they will when they present this data. We're going to need to get the data out there. And we're going to need to let people know via social media, via our websites, via every vehicle we can, which banks are lending and not lending to our communities, because the data doesn't lie. Secondly, this has significance because as we speak, the Community Reinvestment Act is being re-engineered by the Federal Reserve Board, the OCC, and the FDIC. And there's exciting talk and discussion with the new rules that it's going to be data-driven, which will include racial lending data, amongst other data. So we now will have racial relevancy within CRA for the first time in the history of our country, or the CRA since it got enacted in 1975. So this data, even though it has no enforcement, there is the transparency of enforcement. So it's going to be up to us to get this data out and to echo Janet Allen's comment. Yes, we lack capital for businesses, and that's why we lack businesses and viable business in Black and Brown communities. So I'll hand it over to Professor Gaudier from that one.
Yeah, I mean, one comment I'd like to make is it's the analogy of the chicken and the egg. Obviously, we lack Black and Brown businesses, but also we lack capital, we lack financial institution representation in Black and Brown communities. So until we hold institutions accountable for making loans and finding ways to make loans to Black and Brown communities as a representation of their assets in the communities in which they derive deposits from, it's essential that we hold them accountable. Now, when CRA was put in place, CRA's criticism was that it lacked teeth. But what we've seen over the years is community groups and organizations have been able to hold banks accountable through the CRA process to prohibit mergers and expansions and things of that nature. So the role of the community plays in terms of holding institutions accountable, like Al just mentioned, about brand and reputation, is an important feature when we talk about 1071.
Yes.
Al, you showed the website. Did you also show the website about the comments? Or
You got it. I'll put that up right now. Great minds think alike, Professor. I was actually getting to that as we speak.
So could I make a comment while you're doing that, Al? And
go ahead, Deborah.
It's just one thing that when in reference to the lack of Black businesses in our community, I just want to go back to the point regarding the SBA size standards for small businesses, and I want to really encourage that the process of having SBA approve alternative standards, because the truth of the matter is a great deal of our businesses, as we're grouped with such when our businesses are not earning $5 million, and so that number, is just and it is the perception of the small business. So the perception and the language is really important in sending the message and in making these changes. The perception that small businesses, revenue earnings are less than 5 million, and also back to the other gentleman's point that that there are sub-minority categories that need to be specified and include in the language of 1071. Instead of using minority business, let's say, break it down, Black-owned businesses, Asian-owned businesses, so that it's not a perception that we're all grouped in there together. Every city, every, we have different demographics, so let's address those demographics. And so I'm emphasizing it again, that Black-owned businesses, when we're grouped in with all these other minorities and Black-owned businesses, I mean, we have been the backbone of this whole minority movement. And then when we're grouped in with everyone else and we're not counted, it's not fair and it's not equal. So I just wanted to make sure that I spoke on those points, that the language in the 1071 speaks to the perception, and that, it sends a stronger message, and maybe some change in how we view, minorities.
And you're absolutely right, Deborah. And that's one of the features we're talking about here. And again, I employ everyone. The link was just posted, or the web link for your comments was just posted again in the chat. And that's one of the things that we need to go and comment about, to make sure that through the comment period, that our voices are being heard about what specifically we're looking to hold, or the kind of de-aggregate of information that we're looking for. There was also a comment in reference to will this proposed law expose cost in borrowings? Elena had also referenced in her presentation that one of the reporting was on pricing data. One thing that reporting pricing data will allow researchers and analysts to be able to dissect the information about pricing to borrowers in the locations, and again, as Deborah just mentioned, by race as well. And these are important features that we've never had access to before, outside of data being aggregated. So no, these are definitely things we want to express in the comment period. That's important to withstand through the process, to make sure that modifications to what's being proposed isn't changed through the comment process. So our voice needs to be heard, and commenting through the comment period prior to January 6th is where we do that. It looks like we only have a few minutes.
Professor, can you see the comment website page?
Yes.
If everybody could see, this is real simple, and I put in the link of the URL in the chat. It's real simple. I applaud the CFPB. They made it like, keep it simple, stupid, KISS. They actually, all you got to do is go to that website, type in your comments. They even have a tab where you can attach data, right? Testimonials. But let me assure you, there are going to be folks on the other side that want to water down this rule. So it's really critical that we submit a comment, and it's real simple. All you got to do is type in what you feel, hit click, and it gets to this Consumer Financial Protection Bureau.
So two links for you. At the end of Elena's presentation, there's a link to the comment page, and then when you open up her page, it gives you the outlined information, and then there's a direct link under comments. And there's the link here that's also in the chat that actually goes directly to the link, which is also inside of Elena's page, that you'll find on the last page of the presentations if you're able to download and access the slide deck that was presented this morning. So we have a couple of minutes left. Any additional comments from the panel?
I would like to add something. You know what I was speaking when I was speaking about holding accountable the banks, and that's really, really true. If they don't follow the rules, or let's say for some reason the rule doesn't come out the way we want it to come out, we will hold the banks accountable, because we know that the banks, like you say, Al, the banks don't want a bad reputation. They don't want to be in the media. They don't want to boycott against them. They will lose a lot of customers. So, and we're prepared to do just that. So rest assured, everybody listening, this will happen, and we are going to really help our communities and really help to make this happen.
Thank you.
And my last comments is to Elena and the entire staff and leadership of the Consumer Financial Protection Bureau. God bless you and thank you. And you're doing great work.
A great Latina over there.
Thank you all. Thank you. It's great to be here.
Thank you. All right. There being no further questions in the chat, and I appreciate everyone's attendance and participation.